Good afternoon, everyone. In today's video, I'd like to share 3 quick takeaways, or rather adjustments that you can make, especially when we have volatility starting to pick up, to make slightly smarter trading decisions. Now, the way I've laid out this video is we'll start by taking a look at our morning volatility landscape first, then move on to depicting the 3 takeaways, and then finally move on to charts where we can visually put 2 and 2 together. Now, starting off here first with our morning volatility note, the one clue that I think we had right off the bat was given the 30-year bond in comparison to our 4 major index markets. To start off, the S&P, the Nasdaq, the Dow, and the Russell were all on their scalper volatility box model. At that same time, this is 7:25 a.m. Pacific, so about an hour after the markets have been open, the 30-year bond was on the doomsday aggressive model. It had already broken outside of the scalper, it had already broken outside of the aggressive, and it was finally now on the doomsday aggressive, where even on that model, it looked like it was being fairly volatile. All that while, the 4 major index markets are on their scalper, and this is our morning clue that we have. The fact that volatility in the index markets is that much different in terms of the regime compared to the 30-year bond, suggests that we would expect to start to see the index markets start to gravitate towards what that new volatility is currently looking like. Now that definitely ended up being true today, but this was our clue before any of that volatility even hit the markets. So the fact that ZB was essentially telling us that, hey, we have a risk-on environment here and be a bit more cautious. Now I myself should have paid much more attention to that particular clue even though I wrote this. So I've highlighted this here so we can all essentially learn from today's activity and use that to adapt going forward. Now the question comes in, well, how do you actually adapt to this? I have 2 ideas there. The first is, typically, we're using something like a 1-minute time frame chart for our edge signal. Whenever we see clues like this, that could be your sign to instead switch over to something like a 3-minute time frame chart. Not too long ago, I made a video in which I contrasted what that 1-minute signal looks like versus the 3-minute signal versus the 5-minute signal versus the 15-minute signal. And from that video, just the TLDR was that 3-minute was a nice sweet spot for a lot of the times. It did come with the trade-off of missing trade opportunities in the 1-minute, which, by the way, if you had adapted to volatility before essentially any of the volatility kicked in, today that would have cost you 1 winner in that 1-minute time frame chart. However, on the flip side of that, it would have also kept you out of another loser, which came in the subsequent hour, if you had used the 3-minute time frame chart, and that 3-minute I think led to a nicer move than that 1-minute. So that's one way you could adapt to the changing volatility when we have these morning clues. Another way that you could do it is the more obvious approach, which is instead of starting on the scalper for say the index markets, you may preemptively adjust that volatility model to something like the aggressive model, or even catch up directly to the 30-year bond if you'd like to. While adapting to the volatility model does come again with that same trade-off of now missing trades that occur off of the scalper, this gives you slightly better peace of mind knowing that you're being a little bit more conservative, at least one model up, given the clues that we're seeing in the markets. So that was my takeaway from the morning volatility note for our index markets. It's the fact that the indices, along with the 30-year bond, were not on the same page in terms of their volatility regime. And the fact that something that we expect to normally happen didn't happen was a clue in itself, which is where this highlighted statement comes in. Now let's move on to the 3 takeaways, a couple of which we've already discussed. But the first takeaway that I have is that 3-minute edge signal might be a safer bet during periods of uncertainty, which it looks like we may have for the foreseeable future here. So that 3-minute signal, whenever at least we have some of these clues, might be a better means of trying to capture these reversals. The second takeaway that I have is the morning clues will allow us to also scale our expectations for the day. And this is the example where we talked about with the 30-year bond on that doomsday aggressive model compared to the indices which were on the scalper, and the 2 different ways you could adapt to that. The third and final takeaway that I have is as we get down that conservative line from the 5 models that we have, if you remember, let me go back. These 5 models, the scalper, the aggressive, the doomsday aggressive, the conservative, and the doomsday conservative, as we go further down the line here, those models are more likely to hold. And that's what we saw in today's case as well. The scalper was more prone to breaking, but as we started to get to things like the doomsday aggressive, the conservative, and even the doomsday conservative models, they did a much better job of containing price action, at least seeing a brief pause before ultimately having that reversal. So hopefully those takeaways help you. Now let's move on to charts, but before we do, a quick reminder for our Volatility Box members. We released a new MTF Market Pulse indicator over the weekend. It allows you to see the Market Pulse trend. This is the 4 different stages that we have from our Market Pulse line over 18 timeframes, all on one chart. So you'll see here we're on a 1 minute time frame chart, and on that same 1 minute time frame chart, we can see that market trend from the 1 minute all the way up to the monthly time frame. You can download it from our website for free for all Volatility Box members. That's tosindicators.com/indicators/MTF-market-pulse. And I think that too may be a useful addition for this trading for both stocks and futures. All right, with that out of the way, let's now move on to charts, and I'll focus in on the S&P 500 to try and break down today's activity. Now starting here with the S&P 500, we started with our scalper model, and let me touch on that 30-year bond clue before we go into the S&P 500. So the 30-year bond off of the scalper Volatility Box models coming into this morning, we broke well outside of the scalper models. You can see that pretty clearly just as the day actually opened up. And in fact, the 30-year bond was on that doomsday aggressive model, which even that model ended up being broken as the day actually continued. So it gives you an idea of that risk-on environment that I was alluding to. Now bringing this back to the S&P 500 here, we load back in our scalper Volatility Box model. Our first trade came when price action in that 7 to 8 a.m. hour sold into our Volatility Box cyan lines. We had the edge signal confirmation. We had an opportunity to enter inside of that cyan entry line. Let me actually zoom in so this is a little cleaner. The bare minimum move we were looking for was 9.5 points. We ended up making that 9.5 points in this candle right here. Had a little bit of a pullback before then making another wave up higher, really looking like the S&P was about to get going. Instead, however, what we saw in that next hour was a pretty drastic sell-off. Now with this sell-off, we went outside of our scalper Volatility Box clouds with this candle before seeing the edge signal confirmation. So that takes us from the scalper to the aggressive. Now off of the aggressive, this was the valid trade on the 1 minute time frame chart. Our risk involved on this particular trade was a little bit greater than 9.5 points, about 11.75 to 12 points depending on how much room you gave it. We ended up going straight outside of that clouds almost immediately after seeing the edge signal confirmation. Now if we contrast this with that 3 minute time frame chart, and we'll take a look at both trades real quick. So on that 3 minute time frame chart coming back into today's activity, off of the scalper, we ended up hitting that target before we actually saw the edge signal confirmations come in. We're on the aggressive, but we ended up hitting the target before that 3 minute came in. Now in that next hour, however, we did not see the edge signal, which allowed us to essentially stay out of trouble. In fact, the first time we saw an edge signal was the beginning of the 9 to 10 a.m. Pacific hour, by which point price had already given us clues that, hey, the aggressive is not holding either with the price breaking outside. Neither was the doomsday aggressive. We can see that right here. Fell into the clouds, chopped around sideways before ultimately going outside. But instead, it was the conservative Volatility Box clouds which ended up actually holding the clouds, and this became the zone where price breached. We then had the edge signal confirmation, and that led to a slightly nicer reversal, at least in my opinion, compared to that 1 minute chart. The move that we saw, at least after the conservative, for a risk of 12 points, we ended up making a max move of 24.82 points, using that 3 minute as your slightly safer oversold signal here compared to that 1 minute time frame chart, which gave you a much earlier entry. So hopefully this visual contrast helps you understand that 1 minute versus the 3 minute, and how using the clues off of ZB to start off the morning were essentially your catalyst to understand that, hey, we're in a risk-on environment. You might want to adapt to volatility a bit more. In fact, by that 7 to 8 a.m. Pacific hour, we had already broken outside of even our doomsday conservative model in the 30-year bond. So this hopefully brings everything together. A lot of learnings from today's volatility along with yesterday's volatility, which I think we can boil down to those 3 simple takeaways. So one more time, that 3 minute edge signal might be a safer bet during uncertainty. That's takeaway 1. Takeaway 2, the morning clues will allow us to scale our expectations for the day, along with making any necessary adjustments that we may need to make. And finally, as we go further down the line into more conservative models, they're more likely to hold, as we saw in the S&P, compared to something like the scalper or the aggressive, especially when we have the volatile markets that we currently have. All right, hope this video was helpful. Take care, everyone. Good luck trading, and we'll see you in the next update.